He didn't raise his voice. That would have been easier. He sat across from me at the conference table, fingers steepled like he was closing a business acquisition instead of dissolving a marriage. He wanted everything, he said. Not angrily, not emotionally, strategically. The house, the lake property, the vehicles, and full ownership of the company. He said it the way men say things when they believe they are removing an obstacle, not losing a partner, removing a delay. I didn't react. That surprised him. He expected tears, shock, pleading. Instead, I adjusted the sleeve of my blazer and asked the only question that mattered. "Are you sure?" He almost smiled. "Yes," he said. "You never really wanted the pressure anyway." Pressure. That word sat between us, because pressure was something I had absorbed quietly for 15 years. He believed he built the company, and in a visible sense he had. He was the face, the negotiator, the voice in the room. But I was the one who stayed late reviewing the cash flow sheets. I was the one restructuring vendor agreements when he overpromised. I was the one rolling short-term debt into long-term cushions before banks noticed volatility. He thought I was administrative, supportive, replaceable. And that is why he asked for everything. His attorney slid the proposal across the table. It was clean, aggressive, total asset transfer in exchange for a modest settlement and release. He wanted the house free and clear. He wanted full equity in the company. He wanted the vehicles transferred immediately. He even asked for the investment accounts. All of them, he added casually. His lawyer glanced at me carefully, waiting for me to fight. Instead, I leaned back and studied him. "Everything?" I repeated. "Yes," he said again. "There is a specific kind of confidence a man has when he believes he is winning before the game begins. He thought I was attached to the house. He thought I was sentimental about the business. He thought I would resist. I didn't, because I understood something he didn't. Assets are visible. Structures are not. He was asking for the visible layer and offering to inherit the structure underneath. I folded my hands. "You understand that with ownership comes responsibility?" I asked. He laughed softly. "I can handle it," he said. That was the moment I knew he hadn't read the loan covenants. He hadn't reviewed the balloon maturity dates. He hadn't examined the deferred tax timeline. He had never needed to, because I had, quietly. Our company has grown fast, faster than stable companies should. Growth requires capital. Capital requires leverage. Leverage requires management. I had been managing it, rolling debt, negotiating extensions, protecting our personal assets from exposure. He thought he was demanding control. In reality, he was volunteering for full liability. But he didn't know that, and I wasn't going to explain it in a conference room full of lawyers. His attorney leaned forward. "So you're willing to sign?" I looked at my husband, the man who believed he was cutting away excess weight. "Yes," I said calmly. His smile widened. He thought he had won. What he didn't realize was this. For the first time in 15 years, he would be holding everything alone, and everything was heavier than it looked. The real shift began in the second meeting, when numbers entered the room and emotions were replaced with signatures. He arrived early this time. Confident men do that when they believe momentum is on their side. His lawyer had prepared revised documents, clean, polished, aggressive, full transfer of business ownership, full transfer of real estate, liquidation of joint investments into his primary account. In exchange, I would receive a fixed settlement paid over time. Over time, that detail mattered because structured payments depend on stable cash flow, and stable cash flow depends on something he had never fully understood. I sat down across from him again. He didn't look at me first. He was reviewing something on his phone, probably congratulatory messages from friends who already knew he was taking control of his future. He believed this was a power move. He said it was simple. That word again. Men like him use simple when they mean efficient for themselves. I read the first page slowly. He was assuming personal liability for the business debt. He was transferring the operating line of credit solely into his name. He was removing me from signatory authority on the revolving account. He had no idea that account had been restructured 3 months earlier, quietly. I had negotiated a temporary interest-only period after a difficult quarter. It gave us breathing room. That breathing room was ending soon. He didn't know that, because he never attended those meetings. He trusted me to handle it. Now he was asking to handle it himself. I flipped to the section on the house. Primary residence transferred entirely to him. Mortgage refinanced under his sole responsibility. That refinance clause made my attorney glance at me. We both knew what that meant. The bank would require a full reassessment of income stability without my secondary guarantee. And his income looked impressive, but the volatility beneath it was masked by how I structured distribution timing. I looked up at him. "Have you reviewed the refinancing implications?" I asked calmly. He gave me a thin smile. "I can qualify," he said. That wasn't the question.
Qualification and sustainability are not the same thing. His lawyer jumped in quickly. My client's income trajectory supports full assumption. Trajectory. Another word people use when they're projecting growth without confirming structure. I turned a few more pages. There it was. Deferred tax obligations triggered upon restructuring ownership. He hadn't noticed that clause. Or maybe he assumed it was minor. It wasn't. When ownership percentages shift, so does liability timing. And timing is everything. He leaned forward. "You're not going to drag this out, are you?" he asked. Drag. As if careful reading were sabotage. "No," I said quietly. "I just want you to understand what you're asking for." "He understands perfectly," he replied. That was the problem. He understood the surface perfectly. He didn't understand the weight underneath. For 15 years, I had absorbed volatility. When vendors demanded early payment, I negotiated extensions. When revenue dipped, I delayed distributions. When taxes approached aggressively, I repositioned capital. He thought growth was his talent. He didn't realize stability was mine. The negotiation continued for 3 hours. He pushed for faster transfer timelines, immediate vehicle reassignment, immediate account separation, immediate operational control. Urgency is often a sign of overconfidence. Slow people survive longer in finance. Fast people burn brighter and then burn out. At one point, his attorney asked me directly, "Do you intend to claim spousal support?" I could have. Based on structure alone, I could have argued for significant ongoing payments, but I didn't. "No," I said calmly. Both of them blinked. "You're waiving support?" his lawyer clarified. "Yes." My husband looked almost relieved, almost grateful. He thought I was conceding. What I was actually doing was removing my name from dependency on his future cash flow, because I knew something he didn't. Within 12 months, that cash flow would be under pressure, and I didn't want to be attached to a collapsing structure. He leaned back in his chair, relaxed now. "See," he said to his attorney, "this doesn't have to be messy." Messy. He thought conflict meant emotional explosion. He didn't realize quiet exits are often more dangerous. My attorney leaned toward me and whispered, "Are you certain?" "Yes," I said, because I had already calculated it. He was about to inherit. The balloon payment is due in 14 months, the variable interest rate reset on the operating line, the supplier renegotiation window I had postponed twice, the tax deferral deadline tied to ownership continuity. He thought he was taking assets. He was taking momentum without the brake system. The meeting ended with signatures scheduled for the following week. As we stood up, he paused near the door. "You'll be fine," he said, almost kindly. That word again, fine. He believed I was walking away with less. What I was walking away with was freedom from liability. He would walk away with the house, the company, the cars, the accounts, and the full weight of everything I had been quietly stabilizing. He shook my hand like we had closed a business deal. In a way, we had. He purchased control, and I sold him exposure. By the time he realizes the difference, the paperwork will already be filed. And paperwork does not care about confidence. He celebrated before the ink fully dried. That told me everything. The settlement was finalized on a Thursday morning. Clean signatures, polite handshakes, efficient closure. The house was transferred to his name, the business restructured under his sole control. The vehicles were reassigned, joint accounts divided. On paper, it looked decisive, dominant, final. By Friday night, he had already posted a photo online, standing in the driveway, new watch visible. Caption, "New chapter, grateful for growth." Growth. People applaud growth when they don't understand what's underneath it. Friends commented congratulations, business associates messaged privately. One even wrote, "Glad you kept the empire." Empire. I didn't respond to any of it because empires collapse quietly first. The first crack came faster than I expected. 3 days after the settlement, the bank requested updated documentation for the refinancing he had insisted on accelerating. Without my co-signature, his debt-to-income ratio shifted, not dangerously, but noticeably. The operating line of credit, now solely in his name, triggered a reassessment review. That review required updated quarterly projections. He had projections. What he didn't have was the smoothing strategy I had used for years. He called me the following Monday. Not angry, just confused. "They're asking for additional documentation," he said. "They should," I replied calmly. "I thought everything was stable," he continued. "It is, as long as revenue stays consistent." There was a pause. Revenue had never been consistent. It had been managed. He didn't reply. By the end of that week, 2 vendors requested revised payment schedules. Nothing dramatic, just slightly tighter terms. Because when ownership changes, trust resets. Suppliers like continuity. They had trusted me. They did not trust him. He called again. "This is temporary," he said, more to himself. "Yes," I replied. Temporary is a dangerous word in business. It can be manageable, or it can mean the beginning. The balloon payment notice arrived 12 days later. He had forgotten about that. I hadn't. 14 months felt far away when I was structuring cash flow around it. It felt very close when he saw the number printed in bold. He messaged me a photo of the statement. "Why didn't you tell me about this?" he asked. "I did," I replied. "When?" he shot back. "Every time I said we needed to be careful with expansion." Silence. He had heard the words. He just hadn't processed the weight behind them. Publicly, he was still celebrating. Privately, he was reorganizing. He began selling smaller assets. First, one of the secondary vehicles, then a piece of equipment tied to the business. He framed it as strategic optimization. It wasn't. It was liquidity. Liquidity buys time, but only if structural costs are predictable. 2 weeks later, interest rates adjusted upward. Variable line, reset clause, small percentage shift, large dollar impact. His confidence started thinning. He stopped posting celebratory updates. Instead, he began reposting productivity quotes. Pressure creates diamonds.
Pressure also creates fractures. The house, now entirely his, required maintenance he had never tracked personally. Property taxes reassessed under new valuation, insurance premiums recalculated without multi-property bundling. He didn't know I had negotiated discounts across holdings. Individually, none of these numbers were catastrophic. Together, they were heavy. That is how collapse begins, not with an explosion, with accumulation. He called again one evening, this time later than usual. "I think you made it look easier than it was," he admitted quietly. I didn't respond immediately. "Stability is invisible when it's working," I said finally. He exhaled slowly. The business had its first negative cash flow month under his sole control in years, not because revenue vanished, because the timing slipped. One delayed invoice, one accelerated expense, one tax prepayment misaligned. Margins tighten fast when precision disappears. He had taken everything, but what he didn't realize was this. He had also taken the responsibility for micro-adjustments, the quiet recalibrations, the late-night spreadsheets, the renegotiated vendor calls, the tax strategist conversations. He thought he was removing me. What he actually removed was the buffer. By the end of the first month, he stopped calling for advice. Pride hardened, but stress shows in small ways. His voice is shorter, his responses are slower. He once said during a strained conversation, "I didn't realize how much you were actually doing." That wasn't an apology, it was a recognition. Recognition comes too late to reverse contracts. The house looked the same from the outside. The business name hadn't changed. The accounts still carried his signature. From a distance, he had won. But internally, he was now carrying full liability exposure, variable interest fluctuations, vendor renegotiations, a looming balloon payment, personal refinancing pressure, public expectations of continued growth. He had taken the visible structure. He had inherited the invisible weight, and weight compounds faster than ego adjusts. The settlement was complete, but the consequences were just beginning. He thought he had secured power. What he secured was responsibility without insulation, and responsibility, when miscalculated, becomes collapse. Pressure does not announce itself, it accumulates. By the second month after the divorce, the calls stopped sounding confident. They started sounding careful. He no longer opened conversations with updates about growth. He opened them with questions. "Did you ever renegotiate the supplier contract in Q3? Why was the tax reserve higher last year? Was the maintenance schedule always this expensive?" Always. That word surfaced often, because what he was discovering was this: nothing had ever been effortless. It had been managed. The first visible crack came publicly. A scheduled expansion project was quietly paused. He framed it as strategic recalibration, but investors notice pauses, clients notice delays, employees notice tone shifts. Inside the business, staff began adjusting behavior. Invoices were followed up more aggressively, approval processes tightened, meetings ran longer, not because the business was failing, because uncertainty had entered the room. Uncertainty changes posture. At home, the house began showing its age. A roof inspection flagged minor repairs. The HVAC system required servicing. The landscaping contract renewal increased by 12%. Individually manageable, together it is inconvenient. Inconvenience becomes strain when cash flow tightens. Assets look powerful, maintenance is silent. One evening he called later than usual. His voice was flatter. "I may need to refinance earlier than expected," he said. "Why?" I asked calmly. "Liquidity," he admitted. That word again. Liquidity is the first sign that structure is stretching. Refinancing under new market rates was not what he had modeled. Interest had shifted upward again, variable exposure widened, debt servicing increased. He had taken full ownership. Now he was absorbing full volatility. Publicly, he still appeared stable, but private conversations grew sharper. He asked more frequently if I had contingency structures. I had. He did not. I asked him one simple question. When was the last time you reviewed 3-month forward projections line by line? Silence. Projection review has always been my ritual. He saw revenue. I saw the timing. Timing protects margins. Without it, strain accelerates. The next crack appeared through staff turnover. One senior operations manager resigned unexpectedly, not dramatically, just quietly. Stability attracts loyalty. Instability invites exit. He called me that night. "I think people are overreacting," he said. "People react to signals," I replied. "What signals?" he asked. "Your tone," I said calmly. He didn't argue, because stress had started leaking through confidence. Vendors shortened payment windows, insurance premiums were reassessed again after restructuring. A minor compliance audit flagged reporting inconsistencies. Nothing catastrophic, just friction. Friction compounds. He began working later, sleeping less, responding shorter. One evening, during a strained exchange, he said something that revealed the real shift. "I thought owning everything would simplify things." Ownership does not simplify, it concentrates. Concentrated responsibility feels heavier when insulation is gone. He had mistaken delegation for weakness. Now he was experiencing concentrated exposure. The strain moved from numbers to emotion. He snapped during a minor conversation about scheduling. He grew impatient during routine calls. His once confident posture shifted to defensive, because stress changes identity. When you build your image on control, losing control feels personal. I remained steady, not distant, not sympathetic, just calm. He once asked quietly, "Were you holding things together more than I realized?" "Yes," I said. That was not arrogance, it was a fact. The strain deepened when quarterly taxes came due. Without coordinated offset strategies, his payable was higher than expected. He stared at the figure longer than necessary. "Why didn't we restructure this earlier?" he asked. "We discussed it."
You said it wasn't urgent, he insisted. No, I corrected gently. You said it wasn't urgent. Memory shifts under pressure. Blame follows confusion. But strain does not care about blame. It cares about structure. His social presence thinned. Fewer celebratory posts. More abstract reflections. Growth is uncomfortable. Strength is built under pressure. The language of someone convincing himself. Inside the house, small tensions multiplied. Repairs delayed. Bills reorganized. Cost reviews repeated. He had taken the empire. Now he was maintaining the machine. And machines do not admire confidence. They require precision. The strain was no longer hypothetical. It was operational.
And operational strain is the most dangerous kind, because it erodes from within. He had not lost everything, not yet, but the illusion of ease was gone. He thought he won the divorce, but winning meant inheriting full exposure, full volatility, full maintenance, full accountability, full pressure, without a buffer, without stabilizer, without the quiet strategist who had absorbed shocks before they reached him. The strain was no longer invisible. It was measurable, and measurable strain eventually forces one of two outcomes: collapse or confession. Realization does not arrive like thunder. It seeps in. By the third quarter, the numbers stopped behaving the way he expected. Revenue was stable, but margins were thinning. Not dramatically, just enough to create pressure. The refinancing had gone through, but at a higher rate than projected. The debt structure that once felt manageable now required precision timing. Cash flow windows narrowed. Vendor payments overlapped with payroll cycles in ways that left less breathing room. He began calling more frequently, not to argue, to confirm. Did we always carry this much exposure? Was the reserve account ever higher? Were you moving funds between divisions more often than I realized? Yes, yes, and yes. What he was discovering was not failure. It was complex. He had taken everything in the divorce, but he had also taken the invisible architecture that held everything upright. One afternoon, he showed up at the house unannounced. He stood in the doorway longer than usual before speaking. "I underestimated the weight," he said quietly. "Of what?" I asked. "Of all of it. The house, the business, the vehicles, the public image, the financial structure." He walked into the kitchen slowly, as if the room itself carried memory. "You thought you were cautious," he continued. "I didn't realize you were calculating. Caution reacts. Calculation anticipates." He had never cared about anticipation. He cared about expansion. Now expansion has slowed because stability required attention. The maintenance contract for one of the commercial properties had doubled after a regulatory update. Insurance premiums rose again. A key supplier renegotiated pricing. Small increases, compounding. He sat at the table and ran his hair through his hair. "I'm working harder now than I did before," he admitted. "You're working alone now," I replied. That difference mattered. He had assumed control meant freedom. Instead, it meant isolation. Employees were no longer insulated by my quiet adjustments. When there was a shortfall, it hit him directly. When projections slipped, the responsibility landed fully. He leaned forward. "Why didn't I see how much you were doing?" "Because you didn't need to," I said. That was the truth. I never announced the corrections. I never highlighted the buffers. I never documented the quiet decisions that prevented strain. I simply absorbed them. He had mistaken that silence for inactivity. One evening, his voice broke slightly over the phone. He said he had to delay a payment. "Which one?" I asked. "Property tax on the secondary building." Silence. That building had always been fully funded. Not because it was profitable every quarter, because I maintained reserves 3 quarters ahead. He had used those reserves to fund a minor expansion early on, confident that growth would offset it. Growth slowed. Reserves did not refill fast enough.
That was the moment realization crystallized. He wasn't collapsing, but he was exposed. He thought he was prepared, he said quietly. You were prepared for success, not for volatility. Volatility is what tests structure, and structure had always been my domain. He asked me something that he had never asked during the divorce. How would you fix it? Not how you do it. How would you fix it? Because he finally understood. Winning the divorce meant inheriting complexity without the strategist. I answered calmly. Stabilize before expanding. Rebuild reserves before repositioning. Shorten risk cycles. Protect liquidity. He nodded slowly, as if hearing a language he once dismissed. He had taken everything, but he hadn't taken the mindset that built it. And mindset is not transferable in a settlement agreement. Over the next few weeks, his tone shifted further. Less defensive, more reflective. He said one night, I thought dominance was leadership. It isn't, I replied. What is it then? Responsibility without panic. That stayed with him. He stopped making bold announcements, stopped pushing aggressive growth, stopped speaking in absolutes. He began reviewing contracts line by line, calling accountants directly, double-checking assumptions. He was learning discipline under pressure, but learning it late is expensive. One afternoon, he came by again, not tense, not angry, just tired. He admitted, I thought I won. I did not correct him. He looked around the house he had fought so hard to keep. I didn't realize what came with it. Maintenance, volatility, liability, operational strain, reputational pressure, and the absence of the quiet partner who had absorbed impact. He said, I see it now. See what? I asked. That you weren't passive. No, I was strategic.
He finally understood the difference. Realization is humbling, but it is also stabilizing. Because once someone sees the architecture behind the surface, they cannot unsee it. He had taken the empire, but the empire required stewardship, and stewardship is heavier than ownership. That was the realization. Not that he failed, but he misjudged. He thought he won the divorce. He did not realize what came with it. Pressure does not explode, it concentrates. By the time the fourth quarter approached, his voice had changed. Less sharp, less certain, more measured. He stopped calling to update me. He started calling to think out loud. The numbers aren't bad, he said one evening. They're just tight. Tight meant no cushion, no quiet transfers between accounts, no 3-month reserve buffer waiting silently in the background. Every invoice mattered now. Every delay echoed. He had expanded early in the year, confident momentum would carry him. Momentum slowed. Interest rates adjusted. A contract renewal came in lower than projected. Not disastrous, but compounding. Compounding is what people forget when they chase victory. He drove over late one night without warning. Not angry, not dramatic, just restless. I'm restructuring, he said as he stood in the doorway. How? I asked. Cutting one division, selling a vehicle, refinancing again. Again. Each move buys space, not stability. He walked into the living room and looked around slowly. You never panicked, he said. I planned, I replied. Planning feels invisible when it works. When it stops working, it becomes obvious. He sat down heavily. I thought I was simplifying my life, he admitted. I thought if I just removed the conflict, everything would run cleaner. Conflict. That's what he called me at the end. Not a partner, not a strategist, conflict. I wasn't in the conflict, I said calmly. I was the counterweight. He stared at the floor. That word landed. Counterweight. You don't notice a counterweight until it's gone. Then the system tilts. A week later, the turning point arrived. A lender called in a review earlier than expected. Nothing catastrophic, just a reassessment. They wanted updated performance projections, risk exposure summaries, forward liquidity mapping. He had never prepared those himself before. He had signed them. I had built them. I don't know how to present this cleanly, he said over the phone. Then don't present it optimistically, present it accurately. Accuracy is less impressive, but it survives scrutiny. There was a long pause. I can't keep running it the way I was, he admitted. That was the shift. Not collapse, recognition. He had been operating on momentum. Momentum works when reserves exist. When reserves are thin, discipline must replace confidence. I need to slow everything down, he said. Yes, I replied. Sell off expansion plans. Yes. Rebuild buffers. Yes. He exhaled deeply. I should have listened to you years ago. I didn't respond because turning points are fragile. If you say too much, pride returns. If you say too little, denial lingers. Instead, I asked one question. What do you actually want now? Silence. Then honesty. Stability. Not dominance. Not growth. Not recognition. Stability. The word he once mocked as cautious. He came by 2 days later with a folder, this time thinner. He's restructuring the business model, he said. He outlined smaller operational targets, lower overhead, conservative forecasting. It looked familiar because it mirrored what I had done quietly for years. You're rebuilding the foundation, I said. He nodded. I thought expansion made me powerful, he admitted. Turns out control is quieter than that. Control is discipline. Discipline is patience. Patience looks boring from the outside until it saves you. The turning point wasn't dramatic. No shouting, no bankruptcy notices. Just a man realizing that ownership without strategy is weight, and weight without balance breaks things. He looked at me before leaving. I really thought I won, he said again. You won the assets, I replied. He nodded slowly. And you kept the system, he said. Not the house, not the cars, not the business title, the system, the thinking, the architecture. That was the turning point. He stopped trying to dominate the structure. He started trying to understand it. And once someone moves from ego to awareness, the outcome changes. Not overnight, but permanently. Consequences are rarely loud. They arrive quietly, in the spaces where pride used to live. After the turning point, something in him softened, not toward me, toward himself, and that is where real consequences begin. For years, he had measured success by acquisition, more contracts, more expansion, more visible dominance. After the divorce, when he walked away with everything, he believed he had secured proof. Proof that he was the stronger one. Proof that he could survive without me. Proof that I had been an accessory. Now, sitting alone in the house he fought so hard to keep, he began to understand something else. Winning removed the excuse. There was no one left to blame, no partner to criticize, no counterweight to push against. Every decision was his, every mistake was his, every oversight carried his signature. That kind of ownership is heavier than people expect. He started calling less about numbers and more about silence. "The house feels different," he said one evening.
"It should," I replied. "It's bigger now." No, it wasn't bigger. It was emptier. Expansion feels impressive until there is no one to share it with. He had asked for the house because it symbolized victory. He didn't realize it also carried maintenance, loneliness, responsibility. The business required constant attention. The property taxes rose. The staff expected direction. He had thought removing me would remove friction. Instead, it removed reflection. There is a consequence to leading without being questioned. You stop refining your decisions. He began noticing small things. Contracts he once skimmed now demanded hours. Employees he once dismissed now required engagement. He had to listen. He had to adjust. He had to admit uncertainty in rooms where he once spoke with finality. That shift cost him more than money. It cost him identity, the identity of the man who was always right. He told me something one afternoon that surprised me. I thought strength meant not needing anyone. And now, I asked, I think strength means knowing when someone balances you. Balance, the word he had resisted. He had framed the divorce as independence, clean lines, clear authority. Instead, it exposed interdependence, not emotional dependence, structural dependence. The business had been ours in more ways than paperwork showed. My thinking was woven into systems he never bothered to study. My caution was embedded in safeguards he once called excessive. When those systems thinned, he felt it, not to collapse, as instability. He attended a networking dinner a month later, men he had admired, peers he had once competed with. One of them joked lightly, "So you finally consolidated control," the man said. He smiled automatically. "Yes," he answered. But later he told me something about that moment. "It didn't feel like control," he admitted. "What did it feel like?" I asked. Exposure. That was the consequence. When you remove the person who quietly strengthens your position, your weaknesses become visible. He began noticing how often he had relied on my restraint, my negotiation style, my instinct to pause before committing. Without that pause, he overcommitted. Without that restraint, he reacted. And reaction is expensive, emotionally, professionally, personally. He also began noticing something else. People treated him differently, not with more respect, with more caution. Because when someone divorces publicly and claims everything, it signals something: aggression, dominance, ruthlessness. Those qualities impress some people, they repel others. He told me one night, almost reluctantly, "They see me differently now." "They always did," I replied. "You just had me to soften it." That was difficult for him to hear, because it meant the victory came with isolation. He had thought I was replaceable, that the systems would continue the same way without my presence. They continued, but not the same way, and not as smoothly. The biggest consequence was not financial pressure, it was reflection. He had to sit with himself, without argument, without distraction, without someone else to push against. He began asking questions he had never asked before. Why did I rush the divorce settlement? Why did I insist on taking everything? Why did I need to prove something? Those questions did not come from me. They came from silence. Silence forces honesty. He realized the meeting where he erased me was less about assets, more about ego. He needed to feel larger. He needed to feel decisive. He needed to prove he could dominate the narrative. What he didn't realize was this: narratives collapse when reality sets in.
You can claim victory publicly, but privately, you still have to live inside the outcome. One evening, he said something that marked the emotional consequences fully. "I don't think I was trying to win," he admitted. "What were you trying to do?" I asked. "Outrun the feeling that I wasn't enough." There it was, not ambition, insecurity. He had taken everything to fill a gap, and everything turned out to be heavier than the gap itself. I did not comfort him. I did not criticize him. I simply listened, because consequences do not need commentary. They need time. He asked me once, quietly, "Do you regret not fighting harder for the assets?" I shook my head. "No," I said. "I fought for something else." "For what?" he asked. "For myself. Assets can be rebuilt. Identity cannot." The consequence of the divorce was not his financial recalibration. It was his self-awareness, and self-awareness is uncomfortable. He had everything, but he finally understood what he had actually lost. Not a house, not vehicles, not even a partnership. He lost the quiet system that made him stronger than he realized, and that realization changed him more than any courtroom decision ever could. Collapse does not always look like bankruptcy. Sometimes it looks like silence stretching too long. Sometimes it looks like a man sitting in a house that echoes. At first, he functioned. He attended meetings. He signed contracts. He posted photos of new acquisitions. From the outside, everything looked intact. But collapse is rarely visible from the street. It begins in routine. He stopped sleeping well. He stopped answering certain calls. He began rereading emails before sending them, not because he lacked confidence, because he lacked certainty. The business did not fail, but it wobbled. Small miscalculations stacked, an overextended expansion. A partnership entered too quickly, a clause overlooked. Individually, none of it was catastrophic. Together, they created strain. For years, I had been on pause, the second look, the voice that asked, "Have we considered this?" Without that friction, he accelerated. Acceleration without balance leads to instability.
He called me one night, later than usual. "I made a mistake," he said. "What kind?" I asked calmly. "The kind you would have caught." There was no anger in his voice, only exhaustion. He explained the situation, a contract structured aggressively, terms that favored the other side subtly, deadlines compressed. He had signed too quickly to prove he could. The financial loss was manageable, but the signal it sent to competitors was not. They sensed impatience, and impatience invites pressure. That was the beginning. Then came the second layer, personal. The house he fought for no longer felt like a victory. He stopped using certain rooms, closed doors, dimmed lights. He told me once, "It feels like I'm occupying something, not living in it." Ownership without belonging is hollow. Friends who had congratulated him on taking control became quieter. Success is admired, but public severance changes how people approach you. Some saw him as decisive, others saw him as unstable. He began noticing invitations thinning, not disappearing, thinning, because power that isolates itself loses warmth. Warmth builds loyalty. He had optimized for dominance, no connection. The collapse deepened the day he missed something obvious, a payroll oversight, minor, corrected quickly, but it shook him because he had never missed operational details before. I asked him gently, "When was the last time you rested?" He didn't answer. Collapse is not always about losing money. It is about losing rhythm. He had built his identity around momentum. Now momentum felt forced. He began questioning his own instincts,
double-checking decisions he once made fluidly, hesitating before committing, second-guessing negotiations. Self-doubt is heavier than debt. One evening, he admitted something he had never said aloud. "I don't know who I am without conflict." That sentence mattered. Our marriage had provided resistance, debate, pushback. He called it friction, but friction had sharpened him. Without it, he was floating, untested, unanchored. He had thought removing me would remove obstacles. Instead, it removed calibration. The collapse reached its emotional peak the night he returned from a networking event early. He sounded different, not angry, not defensive, small. "They asked about you," he said quietly. "What did they say?" "That you were doing well. And that I handled the separation cleanly." Cleanly. He paused. "It didn't feel clean when I said it." "Why?" I asked. "Because I realized I wasn't separating from you." He swallowed. "I was separating from balance." There it was. The collapse was not financial. It was conceptual. His definition of strength had cracked. He had equated control with power. He had equated acquisition with success. Now he was confronting something else. Power requires stability. Control without balance destabilizes. He began scaling back, quietly, slowing expansion, revisiting contracts, rebuilding safeguards. He hired an external advisor, someone neutral, someone who would question him. That decision told me everything. He was trying to rebuild the pause I once represented. The house changed too. He renovated a room he had avoided, he had kept shut. Small symbolic gestures, but meaningful. Collapse does not always end in ruin. Sometimes it ends in reconstruction. But reconstruction only happens after ego fractures. One night, he said something I did not expect. "I thought I needed to prove I could win without you." "And now?" I asked. "I'm not sure winning was the point." Silence followed, but this silence was not defensive, it was reflective. Collapse had stripped away performance. What remained was honesty. He had taken everything in the divorce, but what he hadn't realized was this. Everything included weight, responsibility, isolation, self-confrontation. He thought he won, but winning removed the illusion. An illusion had been protecting him. Repositioning does not look dramatic. There was no public apology, no headline moment, no cinematic reconciliation. It was quieter than that, and far more permanent. The first sign was distance, not emotional distance, strategic distance. He stopped trying to prove things to me, stopped calling to defend decisions, stopped framing updates as victories. He began speaking differently, less performance, more reflection. One afternoon he said, "I thought removing you would simplify my life." I didn't respond immediately. He continued, "But I confused simplicity with control." There it was. Repositioning begins when someone recognizes the difference between power and possession. He had possessed everything, but possession had not given him equilibrium. Over the next few months, he changed how he operated, not because I told him to, because collapse forced him to. He restructured his leadership team, gave decision-making authority back to specialists instead of centralizing it around himself. He created internal review systems, mandatory pauses before major contracts, risk assessment protocols, all things we had once done naturally together. He had rebuilt friction on purpose, not conflict. Friction, the healthy kind.
At home, he simplified, sold one of the cars, scaled back an expansion project, canceled a membership he had signed up for right after the divorce. Those gestures weren't about money, they were about recalibration. One evening he said something I hadn't expected. He was addicted to momentum. Addicted? Yes. Momentum feels like power, but unchecked momentum feels like invincibility, and invincibility is fragile. He had to lose the illusion to regain stability. As for me, repositioning meant something different. I did not step back into his world. I did not slide into the space he had emptied. I rebuilt my own, expanded my advisory role in quiet investments, took on partnerships independently, strengthened networks that had once been shared but were now separate. I was not rebuilding after the loss. I was redefining after clarity. He had taken the house, the cars, the business, but I had kept something more foundational, my rhythm, my discernment, my steadiness. And that steadiness became visible. Mutual acquaintances began approaching me differently, not as the ex-wife, as a strategist, as someone who had maintained composure when everything shifted. He noticed that too. "You're not smaller without the structure," he said once. "I never was," I replied. That answer settled something between us. Repositioning is not about proving someone wrong. It is about standing so firmly in yourself that no one can mislabel you again. Months later, he asked me a question that would have sounded impossible before the divorce. "If you were reviewing my current expansion plan, what would you challenge?" I looked at him carefully, not because I was considering revenge, because I was considering accuracy. I challenged 3 assumptions. He listened, not defensively, carefully. That was the final repositioning, not a reunion. Respect. Respect that did not depend on marriage, not depend on proximity, not depend on ownership, just clarity. He thought he won when he walked out of that courtroom with everything, but he had mistaken accumulation for strength. Strength is not what you take, it is what remains stable when everything is rearranged. He had to collapse to see that, and I had to step aside to let him. The last time we spoke about the divorce directly, he said something simple. I didn't realize what came with it. I knew what he meant. Everything comes with something. Every acquisition carries weight. Every victory carries responsibility. Every removal carries consequences. He had taken the assets, but he also took the isolation, the unchecked authority, full accountability, and eventually the reckoning. As for me, I repositioned, not louder, not harsher, clearer. I stopped cushioning my insight, stopped volunteering emotional labor in spaces where it was not reciprocated, stopped shrinking so someone else could feel taller. And in doing so, I gained something far more valuable than property: autonomy. If you are listening to this and you feel like someone won by taking everything from you, understand this: talking is not the same as understanding. Control is not the same as strength, and silence is not the same as weakness. Sometimes the person who walks away with nothing visible walks away with the most durable asset of all: self-knowledge. He thought he won, but winning without balance is expensive, and I did not need to take anything back to know that. That was the repositioning, not revenge, not reconciliation, just truth standing on its own. And truth, once repositioned, does not need to argue anymore.